The market doesn't punish impatience. Your own mind does. Before we go any further, I want to ask you a question every trader has faced at least once. Have you ever taken a trade knowing right in that moment that you were breaking your own rules? Be honest. Comment below, why did you do it? Because Section 3 is about that exact moment. The internal trap that grabs you by the throat and pulls you into a bad trade with a sense of urgency you can't explain. The moment where logic fades, instinct sharpens, and emotion takes the wheel. This is the core problem Jesse Livermore identified over a century ago. Most traders do not lose to the market, they lose to themselves. Let's break down the psychological trap in slow motion. Because understanding this is the key to waiting for the perfect setup. The trap begins with silence. Trading creates a strange paradox in the mind. When there is no trade to take, your brain tries to fill the void. Silence feels unsafe. Inaction feels threatening. You begin to think you're missing out, even when the market is completely flat. And slowly, your brain starts negotiating with you. I know it's not the perfect setup, but maybe it's close enough. It might move. Let me just enter small. What if I miss the real move? That would hurt more. This is the first stage of the trap. Rationalizing bad trades. The second phase, illusion of control. Now your brain does something even more dangerous. It convinces you that you can control the outcome simply because you took action. You feel powerful. You feel involved. You feel like you're doing something. But this is the illusion. Livermore warned about this repeatedly. The human side of every trader is the greatest enemy. Your brain would rather feel in control by taking a bad trade than feel powerless by waiting for a good one. This is why traders overtrade. Not because they love activity, but because inactivity feels like losing control. The third phase, emotional amplification. And here is where the trap closes. Once you enter a low-quality setup, emotions intensify. A tiny pullback suddenly feels like a threat. A normal retracement feels like betrayal. A candle wick feels like an attack. A random spike feels like confirmation. Emotion amplifies everything. Your breathing changes. Your hands tighten. Your judgment collapses. And now you are no longer trading the market. You are trading your emotions. This is the exact moment Livermore meant when he said, "I never argue with the tape." Because once emotion enters, you don't see the tape anymore. You see your fears reflected back at you. Most traders rarely wait for perfect setups because their emotional system is wired to avoid silence. We are built to act, not to wait. But the market is built the opposite way. The money lies in waiting, not acting. The final phase, regret and rationalization. And when the bad trade goes against you, the final emotional trap hits. You start convincing yourself that the market is unfair, manipulated, broken, random, but deep down you know the truth. You entered a trade you had no business taking, and that truth hurts. It hurts so much that your brain will do anything to escape it, even rewriting the narrative. It wasn't my fault. It was news. It was a stop hunt. I knew it. I should have avoided it. This is the cycle that destroys traders. This is the trap Livermore saw ruin thousands of hopeful speculators. And it always begins with one thing: not waiting. But if this is the trap, what did Livermore actually do to escape it? What perspective allowed him to sit through the silence without letting fear, boredom, or impulse take control? That answer is the beginning of his timeless wisdom. To survive the market, you must learn to survive yourself first. Before I unfold Livermore's rule, let me ask you, when you feel the urge to enter early, do you ever stop and question where that urge is truly coming from? Share your thoughts below. Your honesty might help someone else see their own blind spot, because Livermore understood something most traders still overlook today. Impatience is not a trading problem. It's a human problem, and the market amplifies that humanity with brutal precision. If Section 3 exposed the psychological trap, then Section 4 is where we explore how Jesse Livermore recognized the trap hand rose above it. The market does not offer opportunity. It reveals character. Livermore believed the market is not a place where opportunity is given. It is a place where character is tested until opportunity reveals itself. A perfect trade is not found on a chart first. It is found in the discipline of the trader long before the chart even forms the setup. Livermore once said something that still echoes through every trading room. There is only one side of the market, not the bull side or the bear side, but the right side. But what he didn't say outright is that you cannot recognize the right side if your judgment is corrupted by impatience. So Livermore practiced one skill more than any other. He trained his mind to do nothing until the market itself forced his hand. You can visualize it like this. He didn't chase the market. He waited until the market bent toward the direction he already believed it should go. Only then would he strike. The power of mental testing. One of Livermore's lesser-known habits was mental testing. He would observe a chart, a pattern, or a price behavior and ask himself, is this the action I have been waiting for? Or is this simply motion masquerading as opportunity? To modern traders, this is the missing filter. Most people know their strategy on paper, but they don't test their thoughts with honesty. Livermore did. He filtered every impulse, every urge, every feeling. Through a simple mindset, does this align with my rules, or does it align with my emotions? If it aligned with emotions, the trade was dead before it began. Waiting was not passive. It was active, precision watching. Livermore didn't wait the way most traders think waiting works. He wasn't bored. He wasn't scrolling random charts. He wasn't forcing signals. He was in a state of active watching. A predator sitting in silence, studying movement, timing the perfect moment, he said. A man must study general conditions to size them up so he can anticipate probabilities. Waiting, to Livermore, wasn't empty time. It was preparation time. The sharpening of the blade. He believed the trade was often won long before entry. By the time he clicked buy or sell, the decision had already been made internally. The market only confirmed it. This is why he waited with confidence. Not hesitation, confidence. Because he trusted the rules he built for himself. The core of Livermore's perspective. At the heart of Jesse Livermore's approach was one idea. If the perfect setup is not present, you are not supposed to be in the market. No exceptions. No improvisation. No maybe. No almost. No FOMO. If the setup wasn't perfect, he stayed flat. Livermore understood something deeply. Being flat is a position. Being patient is a decision. And being disciplined is a profit center. The market rewards the trader who is willing to sit through boredom, to avoid sitting through regret. And that brings us to the next chapter of this documentary. Because philosophy means nothing until you witness it in action. The next section dives into a real moment. A story where Livermore's waiting discipline saved him from a devastating mistake and positioned him for one of the biggest trades of his life. Follow-up questions with answers. Q1. How can a modern trader train their mind to wait like Jesse Livermore? 1. By practicing delayed entry, journaling impulses, avoiding charts when emotional, and using a strict checklist that must be 100% confirmed before entering. Q2. Why is waiting considered an active skill rather than passive time wasting? 2. Because waiting involves analyzing conditions, tracking behavior, refining bias, and preparing for the moment when price aligns perfectly with your plan. Q3. How do emotions distort what traders see on the chart? 3. Emotions create selective perception where traders see patterns that aren't real, overvalue mediocre setups, and ignore warning signs because the mind craves action, not accuracy.